What's going on, guys? So I wanted to make a just quick video about American Hotel Income Properties, REIT. This is a stock trading in the US and in Canada. Um, Trades under the stock ticker HOT underscore U. It is a diversified hotel chain, essentially. They uh, they invest in hotels across the United States. They operate in something like 30 states or something like that, 20 states, something like that. Um, they have 79 hotels, and they're constantly reevaluating their positions. So um, basically looking at their hotels and looking to see whether they're uh, still running efficiently, and if they're not meeting their kind of overall corporate strategy, then they will liquidate those assets, which they have done recently with a few hotels that they had come to the conclusion that they just weren't benefiting the overall company, the overall plan of the company, and so they sold them. And this is something that I like because they use those assets to buy more hotels, to buy better hotels, ones that they thought were better in line with their overall strategic outlook. So yeah, let's go over this real quick. This is their investor presentation. So I'm just going to go over this real quick, show you kind of what they have to offer, and then give you my insights into them, and yeah, let you know what I think, and we'll go over the ticker and let you know what the price is and why I think might be some opportunities here. But like I said, always do your own research, guys. Don't believe anything I say or anything I'm going to, you know, tell you about the markets. Obviously, don't take as advice. Just take as me saying, hey, this is interesting. Might deserve a second look. Might not. You know, take it at that. And I hope people understand that, anytime we talk about stocks, we're just kind of looking into companies, seeing what they're valued at, what they kind of should be valued at, maybe what they have to offer, and kind of, my overall opinions and thoughts. No advice or no overall kind of concrete uh, knowledge of the markets. I'm simply just, an individual doing my best. I see things that I like, so I look further into them, and if I don't like them, then I move on. But anyway, so I figured I'd bring this to you and see what you guys think. Let me know. I'm gonna try and bring you some more videos about some stocks overall this next few weeks. We've had a crash in March that has left us in a pretty weak spot economically, and a lot of people are not sure if we're gonna have another crash over the next few weeks. So we're waiting to see how things play out. But as we're waiting to see, let's look at some of the stocks that are trading a lot below their kind of market value, and also, or maybe not, depending on how you look at these companies, but definitely down quite a bit from their highs, and that might have some opportunities there. Let's get into it. So, as I was saying, they are a hotel chain. Essentially, they invest in and own high quality premium branded hotel properties, primarily in the upper mid scale to upper upscale chain scale segments, including such brands as Embassy Suites, Residence Inn, Hampton Inn, and Holiday Inn Express. Hotels are located across the U.S., primarily in larger secondary markets. So they're not in big cities like New York or California, Los Angeles or Las Vegas, but they are in kind of those secondary markets, those bigger cities, but that are not as, popular destinations like Cincinnati, Baltimore. They're still highly, in demand. There's still a ton of people there, but they're maybe not as expensive as going to buy a hotel in New York or Los Angeles. You're getting the same overall bang for your buck essentially, but in areas that are a lot cheaper to buy property, and that benefit from multiple demand generators. So people are going there for these reasons: business parks, sports arenas, medical centers. They have a few that are located near like airports, hospitals, things like that. Just places where you're having a lot of high traffic in and out, and there's always going to be demand for those properties. And like I say here, properties were all purchased below replacement cost with an average trailing 8% cap rate using long-term fixed rate debt. So I got 79 hotels, which could equate to 8,887 guest rooms, 20, across 22 states in 51 cities. 15 hotel brands operated through 5 brand families. Like I said, they saw them up here, like the Embassy Suites, Holiday Inn. Obviously, like those are the overall umbrella companies. A strategy focused on sustainable returns, how our business and strategy has evolved. So as I said, they're focused on premium brands and all these kind of secondary markets, and they have sold 48 hotels over the past few years. As I was saying, with their capital recycling program, they kind of constantly looking at their positions, constantly looking at their properties, and realizing whether they're still good to keep or whether they want to cut those positions, and then they liquidate those assets and use those assets to purchase more upscale hotels, and ones that obviously offer higher premiums than the low scale or even the mid scale portfolio properties. So on December 3rd, 2019, AHIP acquired 12 additional premium branded hotels that are on average only 4 years in age. So the 12 hotels that they recently bought are basically brand new. So they won't need to be upgraded, or they won't need to put a ton of money into them. Something I also like about a lot of these newer properties. Actively reviewing other opportunities to enhance our hotel portfolio through our capital recycling program or growth opportunities. So they're constantly looking for new, opportunities, which shows you that they're not hurting for money. They're not like struggling financially, and definitely in times like this, they're going to need to be able to put a lot of those assets towards surviving. And it's not that they're shut down, because actually as I was going through, they actually are still in operation. They have, I think, 70 out of their 79 or something like that. They're only down about 10 hotels that are not operational, but all the staff is obviously laid off, and they're not paying a ton of money for the hotels, because the way they have kind of created their debt cycles, it's long-term debt. So these are 5, 6, 7 year plans. So they're not necessarily losing, they're losing money, but they're not losing like a ton of money over the next few months. But they are still generating money too, because they have 70 hotels still opening. So hopefully they're able to kind of break even the next month or two, and then obviously they'll just go back to full swing once things get back, once the economy and once everything starts going again. So on November 28, 2019, AHIP sold its 45 economy lodging hotels to Vokodo Capital Management for $215.5 million, excluding adjustments. So this is one thing that you'll notice is when they kind of first started off, they were in all these low-scale hotel properties, these what they call economy lodgings. They're basically your cheap motels, barely hotels. They're basically still hotels, but they're on that kind of edge, probably in very kind of not so popular destinations, kind of looking to just scale up, right? But as you see, they took all of their properties, all of their low scale properties, and they flipped them. They sold all of them, and they turned all of their portfolio into mid to upscale properties. So this is what you can see their overall strategy and what they've been able to do, which was start with 100%. As you see when we go down here, we see that when they started with their IPO, their initial public offering back in 2013. So an IPO is essentially when you make your company public. So your initial public offering, when you offer shares to the market so that people can buy into the company, average people like you and me, you basically have stock. If you're private, then you won't trade on any markets and you won't have stock. Now, obviously banks or whatever can invest in you if you give them the opportunity, but the only way that average people can invest in companies is through an IPO. So that they did their IPO back in 2013, and at that time, 100% of their hotels were economy lodgings. So they were all low scale hotels. And through the last 7 years, they've been able to effectively trade all of those hotels in for premium branded hotels. Now, if this was monopoly, you'd be like, damn, these were like maybe 4 red houses into into all having hotels on all your properties, right? And generating tons of extra income in the process, right? And as you can see here, kind of the shift, from having these low scale to these upscale, you're obviously getting a lot more return for your investments for them. As like they're generating a lot more profits from those hotels than they were from the original hotels. So as I was also saying, they acquired 12 new hotels with those selling those economy lodging hotels. They were able to acquire two premium branded 12 sorry 12 premium branded hotels in areas such as Pittsburgh and Texas. And like I said, they show you here Corpus Christi, Houston, Midland, and San Angelo. The San Angelo is right near military base, medical centers, agricultural auctions, in addition to government agencies, oil and gas firms, and agricultural research centers. So these are kind of in the middle of nowhere, in other words, but there's lots of things around it. So a lot of times it's not necessarily, it's good to have properties in the middle of Houston and in these big, large Corpus Christi, these big, large centers. But it's also good to have them kind of out in the middle of nowhere, because I've been to a few places where I need to go work. Like I was working up in Kirkland Lake this year, and the hotels were packed a lot of times. Like they were always packed, and I would never think that. Like, man, a lot of these places, people only go there to work for part time or to work a few days of the week, and then they're gone to the big city where they live, right? So these hotels, they do generate income. They do have a lot of people staying there, and they definitely are not bad to target some of these other even tertiary locations, because they have like your secondary locations like Corpus Christi, and Houston's probably a primary location, but then you have your tertiary, your San Angelo and your Midland that are kind of off to the side, but can still give you a good return on your investment. So as I say here, the hotels all built in the last 5 years were acquired below placement costs at $158,000 a key. So that's basically a room, I think. Hotel properties represent 1,203 guest rooms. Properties are in mid-scale to upscale chain segments, franchised under Marriott, Hilton, and ISG flags. Portfolio adds greater geographic diversification to their portfolio, more exposure in the Midwest and Texas. So like I said, they used the net proceeds from their economy lodge sailings, and alongside with the 105 million new fixed rate, so they had to get another loan of 105 million along with the 215, so it cost them about 330 million essentially for those new 12 hotels. So it's not a gotta spend money to make money, and these are kind of some of their newer properties, the ones they just added. So these are the 12 that they just added. As you can see, they're quite nice. They're not bad hotels by any means. All in the last 5 years, built within the last 5 years. So there won't be a lot of updates needed necessarily in a lot of these places. Here you see their kind of overall outlook, where all of their hotels are located. They don't have a lot along the west coast. They basically have nothing. Phoenix is as far west as they go, but that's not necessarily a bad thing. Especially in a lot of these areas, Los Angeles, San Diego, San Francisco, Portland, Seattle. These are expensive locations. Maybe not Portland and Sacramento, but some of these are very, very expensive, and to not want to jump into those markets is not the worst idea. You can kind of still do well. You can see they're very, very big in Florida, which is obviously good. There's a lot of hotels in Florida, a lot of people in Florida. They also have some up here kind of in the New England area. Yeah, so they're kind of located all throughout, but for the most part, they're on the kind of southeast, kind of southeast central U.S. along the eastern seaboard. But you see, like they're not, they're not done. They're still expanding. So you see kind of their portfolio of brands and all of these different properties that they own or name brands that they kind of work under. And these are all of the different properties that are under these. Like I said, they're constantly reevaluating their positions, trying to see if they can sell properties to buy new properties, kind of reinvest their capital recycling program, reinvest their capital. Aimbridge Hospitality, so this is their hotel management team. They brought Aimbridge in back in 2019, or they brought them in 2018, but in 2019 they kind of did a deal with them to lower their cost in terms of management and kind of streamline it so that this company basically handles all the management, but they do it for a reduced cost, and they also are, obviously very skilled and kind of streamline the process so that you kind of have an overall management team, so you don't have to worry about managing all of the hotels and kind of developing your business strategy as to where you want to target. And like they basically are delegating the management to Aimbridge to ensure that they can maintain the overall network or portfolio of properties and kind of constantly reevaluate their position and look towards new properties, look towards new opportunities, or whether they want to get rid of some of their hotels. Maybe if you were doing both, if you were managing and you were trying to look for new properties, you would miss opportunities because you would be spending a lot of time focusing on the managing aspect or focusing on the you would you would lose out on both. But I don't know. I think that in terms of overall exposure, they have pretty good market share in a lot of different regions. Their overall revenue is not amazing. They've been able to generate, like I said, like 335 million for the last few cycles, but it's nothing insane. It's not like Hilton or some of these big chains, but at the same time, like they've only been around for 7 years, and they're constantly changing their portfolio, and they're constantly looking for new ways to grow, but also to maintain their margins and revenue. And this is where they talk about kind of how they've been impacted by the COVID-19 and how okay, so it's 60, sorry, so 19 hotels down. I was wrong there. I said 10. So 19 hotels are down. 60 remain open to guests. Extended stay properties remain the best performing in this environment. So those that are booked for the weeks and months, and some people maybe are stuck in some of these hotels. Restaurants are closed and everything else is closed. So they're saving money from all that. They're not paying for, a lot of staff and a lot of upkeep necessarily, or a lot of services at this point. And like I said, they still see demand from government, military, health, and logistical sector lodging contracts during this time. So they still are making money. Maybe not, they're going to see a cut. Maybe that 330 will drop to 230 or something. Lose like 100 million maybe in profits for this quarter. But that'll obviously come back once the economy gets back into full swing, hopefully. You say all hotels are now minimally staffed, and those that are not, in operation are obviously not putting out a lot of money, so they're not all the staff are laid off, and they're not paying for services, obviously, and they're only really paying for the hotel itself, the loan, and the debt. And like I was saying, they're really trying to focus on turning their portfolio towards premium branded hotels. Trying to get out of that mid-scale kind of markets. Obviously, like I said, they got out of their low scale. They're no longer in the low scale markets, so now they're just looking for mid-grade and high-grade opportunities, probably looking to scale out of the mid into the upscale opportunities within a relatively short time. So they're just constantly reinvesting. They're constantly looking at their properties, and this lets you know that they're constantly kind of putting money into their business. They're spending money to make money. They're thinking about their long-term goals, and they're cutting their losses if they don't see something meeting their strategy. And this is another thing that I liked when I kind of was looking at it, is they kind of listened to a lot of their customers, and kind of took surveys and looked at the reviews they were getting, and they went in and they renovated a lot of their hotel lobbies and a lot of their rooms. You know, they basically went in and they renovated all of it, gave you a completely new outlook. So you see here, they show you kind of the before and after. So here's your before. It kind of looks very generic. It's not bad, but it's very generic. It looks like any standard hotel. And then you have your after. It looks like kind of like, you know, very upscale, very, you know, inviting, open. You know, the things you'd want to see in a hotel, you know. So obviously you see the same kind of setup, the same style of building, but obviously it looks a lot better than it did before. It's the same here. You see just constantly looking at ways to upgrade their facilities and get kind of a new, better kind of perception of the hotel, more inviting for guests. Just, you know, trying to upgrade their businesses and upgrade their kind of strategy to draw in more customers and to, you know, make their hotels more appealing and get better reviews, and obviously address those concerns. And I was looking up like several of their properties. I was looking up kind of their reviews, and a lot of them have really good reviews. And what a lot of them were complaining about was things like the lobby not being very updated, the rooms not having, you know, newer stuff. So they went in and they addressed all those issues basically. And so that's the investor presentation anyway. And down here they talk about their sustainable initiatives. They're trying to kind of go towards more sustainable initiatives like straws, eliminating plastic straws, eliminating kind of single-use toiletry plastics, trying to replace it with renewable energy, lighting, and efficient. And they all pay hotel employees more than minimum wage to kind of ensure better service. And this just talks about how like a lot of places, you know, give higher margin. A lot of their areas where they're going still have a lot of volume, a lot of visitors, but not really crazy expensive. But still have a lot of demand generators. And yeah, like I said, that's pretty much it of the investor presentation. These are some of their nicer hotels. So kind of Embassy Suites there in Dallas, Fort Worth, and their as far west as they go, their Embassy Suites there in Phoenix. Kind of have their nicer hotel properties. Not bad, not bad. So let's take a look at the stock real quick. Today it's trading at 215, and as you see, the crash here that happened back in March, pretty much everything lost a lot of their value. This thing went to $1.38. It's kind of rebounded nicely all the way up to $3, and then it's dropped back down to 215 now. The one thing you want to notice here is that the revenue is kind of off now, but obviously, like I said, they were making 33 million or 330 million a quarter, but at the same time, it's not necessarily all revenue, right? That's just what they're generating. But this is still wrong as well, so don't necessarily take that. A lot of times these platforms, I really just like to look at them for charts. I don't necessarily look at all this, but it's nice to look at things like days range, look at the 52-week range to see kind of where it's gone, where it's come from, and where it's going, right? But other than that, a lot of these numbers are a lot of times wrong. But either way, you can look at it. They do have a dividend as well. They actually had quite a nice dividend before March there, but obviously they reduced it quite a bit because of the COVID situation. But as you see, the stock is down probably about, well, what, 300, 400% from its highs. So when it's high of 745, 750 there, it's dropped all the way down to 215. And at one point it was $1.38. And like I said, like I'm not saying that you should necessarily buy it, but I'm just saying that like it's an opportunity, and it's definitely interesting to look at because of several factors. I think that there could be growth, and I'm definitely looking at REITs as a interesting place to invest, but we don't necessarily want to just jump in at this moment. Like I said, I don't know how the markets can go over the next few weeks, but we can keep an eye on stuff like this, and I think there could be some potential in the future for American income properties. And I think that pretty much wraps it up. But like I said, it's an interesting opportunity, and it's definitely still showing some weakness at the moment, but like I said, it could just be fear, could also be uh, could also just be, you know, the fact that this whole situation is making everybody not want to invest in certain industries. I can understand. Obviously, a lot of industries are shut down. Airlines, um, movie theaters, you know, a lot of things are not operating. But as I showed, like they still have 60 properties operating, so they're not fully shut down. They're not even reduced, you know, more than 20% of their total capacity. So it's interesting. I don't know. I think when you kind of look at the technicals, you start to see that there's certainly a lot of upside. And right now, like obviously, if it drops back down to like a $1.50, starts going back into that kind of below $2 range, I think it's definitely a good opportunity to jump in. That's where kind of I'm waiting to see if it's able to drop down below $1 again. If not, then we'll kind of see how it looks. But I do think that, you know, we could see some good opportunity for a nice swing trade, hold it for a few weeks, make like, you know, as it jumps back up to $3, even $4, could provide some good buying opportunities. But overall, I do think it is an interesting company. They have a lot of things that interest me. Like I said, don't ever take it as advice, but at the same time, just take it as, you know, something interesting to look at. And if you are interested, let me know. Let me know if there's anything you want me to cover, or have any questions about the stock, or about anything that I'm going to talk about in my next few videos. Or you ever want to, you know, ask a question, feel free to leave it in the comments. Like, subscribe, and let me know what you think. All right, have a good one.